What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today is merge day. We've had the merge over there on the Ethereum blockchain, switching Ethereum from proof of work to proof of stake. A highly anticipated moment. Many were concerned that we would see big dramatic price action and uncertainty happen in the market during that moment. As we can see over here on the Bitcoin price chart, Bitcoin remained within its range throughout the merge overnight. Really nothing new to talk about here on the Bitcoin price chart, as it still is within its range. And while the same could be said for Ethereum, as the prices did remain relatively stable, and while we do have some red throughout the market, these percentages are pretty much kind of daily volatility of what we typically see, 1, 2, 3% pretty much every day. Nothing too crazy has happened here in the market, as Ethereum as well was able to stay within this small range right in here going through the merge. Vitalik Buterin did confirm it over here on Twitter, and we finalized. Happy merge all. This is a big moment for the Ethereum ecosystem. Everyone who helped make the merge happen should feel very proud today. So the merge is complete. No drastic price action during the merge. We haven't seen anything break. So it made it through. Now the question is, what comes next? Which of course is what we're always trying to speculate on, right? Now, we still don't know if Ethereum's following the supercycle fractal, as Bitcoin has followed 3 previous supercycle fractals before. But even me, I've thought this supercycle for Ethereum is kind of silly. How could prices ever in any way get to this type of height? And clearly we'd need to see some massive flock into the cryptocurrency market to see any type of price rise like that happen in Ethereum. It's 4,000, 5,000%. We're talking like an $8 trillion market cap for Ethereum. Sounds crazy, right? I agree. But let's talk about what actually changed with Ethereum here. It's more than just being a switch from proof of work to proof of stake. There's a supply dynamic that has changed here. Bitcoiners often refer to the block reward halving as being a big monumental time for Bitcoin. And you have to understand what has actually happened here for Ethereum. It's almost like having 3 consecutive Bitcoin block reward halvings happening overnight. When Bitcoin had its last block reward halving, we went from 12.5 Bitcoins per block to now 6.25 Bitcoins per block reward. When we have the next Bitcoin block reward halving happen in 2024, it will go down to 3.125 Bitcoins per block. And then in 2028, it'll go down to 1.56 Bitcoins per block. So imagine that. In 2020, you go from 12.5 Bitcoins per block to 6.25. And in 2024, you go from 6.25 to 3.125. And then in 2028, you go from 3.125 to 1.56, right? That's what everybody talks about with Bitcoin, Bitcoin block reward halving. The supply dynamics and the supply issuance getting cut in half every 4 years. As you can see over here for Ethereum, the total number of Ethereum issued per day to block rewards or to miners is about 13,000 Ethereum per day. And you can see that right here from block rewards, 12,600, 12,700, and typically right here, right around 13,000, the high 12s, low 13s. And here's a little write-up real quick from ethereum.org on how the merge is impacting the Ethereum supply. We're not going to talk about burning, because burning can actually create deflationary supply, which is even, better than your inflation rate. We'll get to that another time. Today, we're just going to talk about the inflation rate. But as we can see, mining rewards, about 13,000 Ethereum per day pre-merge with mining, right? We could see that over here on Etherscan. Now that the merge has taken place, the total Ethereum issued per day goes down to 1,600 Ethereum per day. Remember, we were just talking about the Bitcoin block reward halving, going from 12.5 to 6.25. to 3.125 to 1.56. This is about a 90% drop in the daily issuance of supply of Ethereum. And this is like having 3 Bitcoin block reward halvings happening in one day. Not taking 8 years, but happening in one day. In addition, it's moving from a proof of work model to a proof of stake model. So pretend that you have a certain number of Ethereum in existence. Just pretend each one of these squares represents an Ethereum, and this is the total supply of Ethereum. And then you have miners over here producing new Ethereums every day. They add them, and then they usually just sell them on the market, and off and away they go, added to the new supply. But the difference here is that now that it's no longer proof of work, it's proof of stake. In order to get these new Ethereums, you have to stake Ethereum, which means a portion of the supply needs to actually be held by stakers. It can't just be moving freely throughout the system. So a bunch of this gets locked up and stored away, reducing the total number of Ethereum that are actually out there circulating around freely. So not only do we reduce the number that actually gets added every single day, but a large portion of the supply needs to be held and locked up and can't be sold in order to keep producing more Ethereum. So you have a lower inflation rate and you have supply tied up that is less likely to be sold. So for those who are believers that the Bitcoin block reward halving, where you cut supply from 12.5 to 6.25 or 6.25 to 3.125 per block, if you believe that that automatically sends you into a bull run, well, we just watched an absolutely insane drop in supply issuance happen over here in Ethereum, an equivalent of 3 Bitcoin block reward halvings happening overnight. In addition, with a model that encourages the current supply to be held and not sold, and encourages the new supply that gets issued to not be sold, but rather to also be staked. So it's an interesting time for sure for Ethereum to see how this pans out. And like I mentioned earlier, we're not going to go too deep into it, but the burn, there's not going to be a change in really the gas prices that happen here, but at an average gas price of at least 16 GUI, at least 1600 ETH is burned every day, which effectively brings the net Ethereum inflation to 0 or less post-merge. So essentially the cost of actually utilizing Ethereum burns more Ethereum that is issued daily. So we'll see all about that. But yeah, if you want to kind of understand the big deal with the merge, it's like 3 Bitcoin block reward halvings happening overnight. Now, what that means is that all these miners can't mine Ethereum anymore. They have to find somewhere to go. And we can see that there's really kind of 2 places they've been flocking to in the last 24 hours. We can see over here Ethereum Classic. The hash rate has nearly tripled or quadrupled in the last 24 hours. This is actually an all-time high. We can look at this on the weekly time frame to see it, monthly. And then if you look at the year and then all time, this is the all-time hash rate for Ethereum Classic. Look what has happened suddenly. Same goes for the network difficulty. We can see over the last 24 hours, it has effectively tripled. Look at it on the weekly, monthly, yearly, and then all time. Hash rate and difficulty soaring to the moon as Ethereum miners move over to Ethereum Classic. The same can also be said for Ergo, which in the last 24 hours just a little under doubled. Look on the weekly, monthly, year, all time. Brand new all-time high for Ergo, difficulty, and for hash rate as well. So miners are shifting themselves over to Ergo and Ethereum Classic. The interesting thing about both of these price charts is they both kind of ran up prior to this moment and gotten back to these same price levels. You see both Ethereum Classic kind of battling over here against the April pricing, and we see the same thing over here for Ergo battling over here against April pricing from earlier this year. Neither of them able to break out above these levels. Both of them still finding major resistance, but it'll be interesting to see what happens to these 2 assets as all of these miners are now shifting over to these 2 assets. Now, I personally do not own any Ergo. You guys do know I do own some Ethereum Classic, but I decided to look at Ergo because I've never really heard of it before until Charles Hoskinson started kind of bad-mouthing Ethereum Classic and promoting Ergo over there on Twitter the other day. But this is a classic example of crypto. And, a lot of new people don't recognize the volatility that comes into this market. They think, hey, 5,000, 10,000% price rises are normal, which is if we look at Ergo and see what it did between 2020 and 2021, Ergo rose 18,468%. But what's crazy about it is it actually got back to its 2017 all-time high. And prior to that, Ergo had lost 99.56%. That is crypto volatility for you. That is how insane this market is. It is not for everybody. 18,000% gains can be accompanied by 99% losses and 99.56% losses and then 18,000% gains. It's insane. But when I saw this chart and started looking at this for the first time, I thought to myself, my gosh, that thing lost over 99% and then took it all back and went right back to the all-time high again. insane. And to like give you an idea on the rundown of the math, like let's pretend you are buying here and accumulating here, and you put like $1,000 in right here in November of 2019, and then by down here when the C19 happened, you lost 83%. So your $1,000 turns into only $170. And you're like, well, that's it. Game over, right? And then by the time the whole thing is done, it's risen all the way up 3,000% above that. And your original 1,000 went from 1,000 to $170 to $30,000. That's crypto, man. But either way, back to the topic of the hash rate for Ethereum Classic and for Ergo. Both of them are still battling in here. They're not getting breakouts happening just yet, if they even are. But it's definitely amazing to see these hash rates just flying to absolute all-time high for Ethereum Classic and Ergo, along with their difficulties. So miners have an interest in those, but they both are at resistances that they just can't seem to get through. But as for today, prices seem to be holding up relatively okay with the huge event. I know there was a lot of worry out there for this event when it was going to occur. Nothing too drastic has happened. Ethereum is down about 3.5%, but I'm pretty sure people were more worried about 20, 30, 40% style breakings, or who knows. I think there's a lot more fear than just 3.5%. As for Bitcoin, it's still holding up as it's in the middle of this range, like I've kind of talked about all week. I don't trust price action to either direction throughout the week, as long as we're in the middle of this range. If these prices get lower down here, if we get closer to about $19,000, that's kind of my accumulation bucket for me. I'm bullish on Bitcoin so long as it doesn't take out the low set back there in mid-June. If we take out that mid-June, I will get rid of any accumulating that I'm doing down here. But as for figuring out how prices are going to react in here, good luck. Like we've talked about, this can all be very hectic and very sloppy. And that's kind of really just what I'm looking for. Make sure Bitcoin can really just kind of stabilize itself in here. And to kind of reiterate that price level there for June, right? That low set there on Bitcoin, that's also the same price level as the altcoin market backtesting its previous all-time high without closing any candles below the previous all-time high and pinpoint nailing the 200-week moving average. If Bitcoin takes out that low in June, probably going to see the low get taken out here in the altcoin market. All these things, you take out these lows, who knows how low this thing could go. So all those levels right there, the current lows that we have right now in the market are significant lows. It's just like make or break for the crypto market. I know there's a lot of people out there looking for one more dip to buy. Recognize that one more dip takes out the all-time high, takes out the 200-week moving average on the altcoin market, takes out fractals, takes out Fibonacci's, takes out previous all-time highs, all those different things. So unquestionably, accumulation area for me for Bitcoin. But if you take out that low, big problems. So we'll see how the market settles throughout the day, and we'll check in on it again tomorrow. In the last few minutes, we actually are seeing some price action come out of Ethereum here. So we'll see if this leads to a bigger break in here, if this is some type of head and shoulders playing out. Otherwise, crazy supply dynamic change for Ethereum, crazy change in the miners heading over to Ergo and Ethereum Classic, leaving the lone standing wolf at the top, Bitcoin, the biggest proof of work blockchain in existence, all by itself. So, all right, guys, that's going to be it for this one today. I'll catch you guys tomorrow. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.